Welcome to today's deep dive. You're probably used to tracking your gold positions through, um, I don't know, inflation data or treasury yields, maybe central bank reserve.
Right, the usual suspects.
Yeah, but today we're looking at a completely different framework for predicting market momentum, which is, well, it's planetary alignment.
It's definitely out there, yeah.
We're breaking down this really fascinating source document. Specifically, we're looking at Lesson 8's monthly analysis from the January 2027 Gold Astrology Calendar.
Right, so we are essentially translating celestial mechanics into actionable market data, focusing on how this framework projects key dates and momentum shifts for that entire month.
Okay, let's unpack this. Because, if you tell a room full of quants that Jupiter is dictating their portfolio, they'll probably laugh you right out of the room.
Oh, absolutely they would.
Right, so before we look at the big money days, we first have to understand the underlying system. Like, how exactly is this calendar quantifying the market, and where does the baseline sit for the month?
Well, it uses what the source calls the coefficient method. Okay.
So it's not just making vague statements like, Mercury is in retrograde, so expect volatility. It actually assigns a strict numerical value, a coefficient to specific dates.
Based on what, exactly?
It's based on the exact geometric angles between planets. Historically favorable alignments for gold generate positive points, and stressful alignments generate negative points.
Oh, got it.
Yeah, and then you just tally those up, and the daily sum is your coefficient.
So it's less like a generic weather forecast and more like calculating gravitational pull. Like if multiple heavy planets align in a way that historically pulls investor sentiment upward, the score compounds. And if they pull apart into stressful angles, I guess the score drops, like a cold front coming into the market.
Right. You're calculating the net astrological force on the market for any given day. And the source actually pinpoints the weakest point, the absolute trough of this gravitational pull for January 2027.
Okay, what's the date?
It's January 8th, which carries a coefficient of -1. -1. Now, wait, is that exceptionally low? Because in a vacuum, -1 just sounds like a slight dip, not a massive market crash.
It's relatively mild, yes.
Okay.
The scale isn't capped at 10 or 100 or anything. It's simply a running sum of active planetary aspects.
Okay, so it just means the negative or bearish alignments barely outweigh the positive ones.
Exactly. It just represents a stagnant, low-energy day for gold momentum.
Okay, so if -1 is our baseline trough on the 8th, we have to look at the other side of the pendulum. Just how high does this scale go when those planetary angles start stacking up in gold's favor?
Oh, it escalates incredibly fast. Just over a week later, the calendar pinpoints the strongest day of the month, which is January 16th.
Okay.
And the coefficient jumps to a +17.
+17, wait, really?
Yeah, +17.
Okay, now that jump makes sense. Going from a net negative aspect to a combined positive weight of 17 in just 8 days, that is a massive shift in momentum.
It really is.
But how does that actually play out on the trading floor? Does gold just violently gap up at the opening bell on the 16th?
Well, not necessarily instantly. The source reads a +17 as an indicator of intense upward momentum building in the gold market.
Like a coiled spring or something?
Think of it like a slingshot being released, yeah.
Yeah.
And that high-energy momentum doesn't just vanish after 24 hours.
It sticks around.
It carries through to other strongly scored days in the back half of the month, specifically January 20th, the 23rd, and the 28th.
So you have this dense cluster of high-gravity days stacked tightly together. It sounds like a trader's dream setup. But I have to push back a little here.
Sure.
Planets move slowly. They don't just click into place at 9:30 a.m. Eastern Time.
What's fascinating here is that the source directly addresses that exact limitation. They explicitly state that financial astrology requires a margin of error of about 1 or 2 days.
Oh, okay. That actually makes perfect sense. It's like an atmospheric pressure shift, not a precision strike.
Right. The calendar is tracking broader planetary phases. A major astrological aspect might technically peak on the 16th, but the corresponding market shift could be triggered by early buyers on the 15th.
Or I guess it could fully materialize a couple of days late, like on the 18th, as the rest of the market catches up to the momentum.
Exactly. It's a system for anticipating the rhythm of the momentum, not some sort of day trading cheat sheet.
So if you're utilizing this framework, you're tracking the journey from that stagnant -1 trough on January 8th, riding the momentum wave up to that massive +17 peak on the 16th.
And coasting through those late-month high-score days.
Right, all while keeping that 1 to 2 day buffer in your back pocket. So what does this all mean?
Well, it leaves you with an incredibly compelling question to ponder on your own.
What's that?
If financial markets are ultimately driven by human emotion, by our collective reactions to data and risk, could a calendar tracking planetary cycles actually just be an unconventional method for mapping out the predictable rhythms of mass human psychology and market sentiment? Yeah, maybe the stars aren't dictating the price of gold at all. Maybe they're just acting as a mirror for our own predictable nature.